The All Ordinaries Index has now fallen 8.5% since January the 4th, and at one point today it was down 11%. Now anything over 10% is deemed a correction, so it was one then. 8.5%, no problem. Investors adopted the fetal position a fortnight ago when American inflation in December was revealed to have been 7%, the highest since 1982. Last night, the US Federal Reserve Board said it would hike US interest rates in March, all else being equal. And funnily enough, the US share market barely moved on the news. Tell us something we don't know, investors said. Also, there remains a question mark over how sustained the high inflation will be. For example, this chart shows goods inflation and the main bulk shipping index, the Baltic Dry, which has collapsed, suggesting that supply chain disruptions at least are easing. Here's what the punters playing the Australian interest rate futures market think the RBA cash rate will be in 2 years' time: 2%. Not that the market's infallible, of course. After all, as 2019 began, the punters were betting that the cash rate would be 2% in 2 years from then, and it turned out to have been 0.1%. Anyway, the share market punters are anxious at the moment and merciless on any company unwise enough to produce bad results, such as Kohler today, which said profit fell 58% because of supply chain disruptions and higher shipping costs. Other retailers also suffered pretty big falls, but miners closed higher. Commodities apart from gold went up today, and finally the Australian dollar is down as well as the share market. It's now below 71 US cents. And that's finance. Thanks for watching. You can check out more finance news by clicking there, and don't forget to click subscribe down there to get all the latest updates from ABC News.